Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today's Wednesday. It's August 2nd. The market's going to gear up to open up in about an hour and 45 minutes or so, give or take, and an hour and 32 minutes to be exact. Now, as you can see here, the Nasdaq is down over 100 points. The Dow's down over 100 points. Anything over 100 points, 150 points is not random. But on Nasdaq, this is equivalent to the Dow opening up about 250 points. This is a huge, huge move. Now, this is not a good sign, especially when earnings are around. Now, before we get into the technicals, before we get into the fundamentals, I want to show you something. And this is really, I'm going to say it again, really important. If you look at the Russell 2000, it's down quite a bit this morning. Look at how we're going down and look at the level we're at right now. If you look at this level for a while, this level hit twice before. These are major areas. First time it was summer of 2022. The second time it was February of 2023 and right now. And here's the problem, folks. There's really no major catalysts to cause the stock market to rally right now. We kind of seen the best of earnings and Fed data is coming out mixed. Fed is standing by. We need a catalyst, and we're entering August right now. Typically not a really bullish period of the year. So look at the Russell 2000. It doesn't look good technically. And by the way, these levels are a lot more important than technical indicators because these are substantial levels that have hit several times. Price always beats technicals on a long-term basis, and this is a long-term basis. But it's not just the Russell 2000. Look at the S&P 500. The S&P 500, same thing, 1, 2, 3 times. I mean, this is going back, again, February of 2022. So we're going back quite a bit. We're going back like, what, a year and a half here or so, give or take. And you could see the same thing. We're coming off pretty good. And again, the FANG stocks, except for Apple, which is coming out tomorrow, and a couple of others, the real big names have already reported. Look at the QQQ. QQQ isn't looking that way. It doesn't have that level of resistance. It actually beat that resistance right here. It's actually breaking out. But I'm hesitant because I want to see us take out this high. If we can't take out this high and we break this trend line, it doesn't look good. So there's still some hope for technology. But I'm telling you, as I'm sitting here right now, it's just not looking all that great, especially if we can't take out this high when Apple comes out with earnings tomorrow. How about the Dow Jones? Same thing. Same thing. Look at momentum levels right here. Again, February of 2022. It's very hard for the market to make new highs right now in light of the economy. So when you're looking at the SPY and it's selling off already like this, and there's really no buyers stepping in, when you look at the Dow, and we've had some really good earnings, and it just can't get it past a certain point. But in our defense, in the market's defense, we've been going up since 425. We're at 802. So we've been going up for 3 months straight. So it wouldn't be a big surprise for the market to cool off, especially at the current levels. The Dow, the Dow has been outperforming the rest, but again, it's still very hairy. Now let's look at the rest of the sectors so we could get a good gauge of what's been going on, get a micro view. This is 6 weeks, this is 3 weeks, and this is 1 week. I included all the major sectors, and I also included the Dow Jones, the broad market too, Russell 2000, the Nasdaq, and the mid caps. So you got small caps, mid caps, Russell 2000, QQQ, SPY, and the Dow, in addition to our 11 sectors. So there's a total of 15. I'll have to add gold here as well, but it's not as pertinent right now. So as you can see here, over a 6-week basis, communication, small caps, energy, QQQ, what is this? Industrial, technology, most technology is above. Even consumer discretionary is up here for the 6 weeks. 3 weeks, if you go out 3 weeks, you'll see that QQQ is still here, technology is still here. Consumer discretionary drops really hard. And if you look over the last 7 days or over the last 5 trading days, you'll see that QQQ is coming back. The consumer discretionary is kind of sitting, technology are kind of down here. So it looks to me like over the last 6 weeks where you had communication, you had technology down here, it looks like things are changing just a bit. I mean, you still have the Russell 2000 and the energy here. It was pretty good. Look at that. Energy and Russell 2000 and communication services. Those are looking good. Energy, Russell 2000, communication services. And now communication services, Russell, and energy. Now, where's QQQ over here? QQQ here is in the middle. 3 weeks ago, QQQ is a little higher up. Now QQQ is staying up there. So it looks like technology is not really going down per se, but it's not really moving higher. It's not like it was 3 months ago where it was communication services, technology was up here second, and the third spot was consumer discretionary. Consumer discretionary is down all the way down. So we got to be really, really careful. And in the last several weeks, we haven't seen really anything good with consumer staples. So I would be very, very cautious, and I would be focused on the three sectors, the three major sectors that have been running away. For 6 weeks, energy, Russell 2000 communication services. 3 weeks, energy, Russell 2000 communication services, little basic materials in there, and communication services, Russell and energy. Again, be really cautious, but those are the three sectors that keep popping up to the upside. So we're going to be optimistically looking at them. As far as Fed data, we've got ADP employment report. Now, I want you guys to be really careful, and I'll tell you why I want you to be really careful. Because for the last month, or actually the last couple of months, this report has been completely screwy in relationship to the Friday's employment situation. Usually, it's a big, big preview. I don't know. It seems like it's broken or something. 497,000, 185,000. We got 497, which was like 3 times better than expected. And then the public report that came out on Friday, a few weeks back, was a nothing burger. So I would be very wary of the ADP report because it's not communicating really well with the employment report as far as I could see. And also, look at the 150 to 280,000. I mean, is that a consensus? Why not just make it 150,000 to a million, right? I mean, it just doesn't make any sense. But that's coming out today, and energy, petroleum status reports coming out today. I want to see how energy reacts to the report, and then tomorrow you've got jobless claims, and Friday you've got employment situation. Not huge reports this week. You had big reports last week. Now, a few things that you need to pay attention to today. You've got earnings. First of all, earnings came out on AMD yesterday. Earnings are up pretty good. The stock they outperformed. But look at semiconductors as a whole today. They're down. So they're not doing all that great. And the QQQ, as I mentioned, is down as well. So AMD did not spruce up technology. Hopefully it could spruce it up as the day continues, but it didn't spruce it up, and the implied volatility on AMD was 7.8%. The stock is only up, just to show you an idea, just to give you an idea. Stock is only up 2.5%. So even the earnings couldn't express the implied volatility, which means option sellers made money, because I was expecting a move potentially 10, 15 points, either up or down. But it didn't happen. So be careful. If AMD falters today and doesn't continue making all-time highs, that could really put pressure on technology stocks and chip stocks. Now, today, you've got PayPal, Humana, Shopify, Hood, Etsy, a bunch of stocks. Keep your eye on Shopify and PayPal. Their implied volatility is really high. Also, Etsy and Hood. So that could spruce things up. And tomorrow, you've got the big daddies, Amazon and Apple. And if that can't get NASDAQ to make an all-time high, we're in deep, deep doo-doo. That's why I'm saying I'm cautiously optimistic that NASDAQ will rally, because if we can take out this high like we did here, we're good to go. It may happen after Amazon and Apple report tomorrow. But again, we've got today CVS, PayPal, Humana, Shopify, Oxy, KHC, Hood, and Etsy. These are the big players. So again, be really, really cautious. Let's talk about global economy, right? Fitch downgraded U.S. credit rating. That's bad. That's not good. They unexpectedly downgraded the U.S. sovereign rating to AA+ from AAA on Tuesday, citing potential fiscal deterioration over the next 3 years. Concerns about repeating down-to-the-wire debt ceiling negotiations that could threaten government's ability to meet its obligations. That's some serious stuff, folks. And that's one of the reasons why all three indexes are down today. Tuesday session, the Dow stocks outperformed. You had Caterpillar, you had ANAT, Norwegian didn't do as well, and JetBlue. So consumer discretionary stocks are taking it under the chin this earnings session or season. And they were really doing well up till now. And if we look at consumer discretionary, Let's take a look and see how it looks right now. Yeah, if it doesn't take out this high right here, I mean, this sucker made a swing right here. If it doesn't take it out, I don't think it's going to. I think we're going to come right back down. I'm honestly thinking that consumer discretionary, you've got a descending triangle on consumer discretionary, and all these other indexes are overbought. Look at that. It's not looking all that great. It really isn't looking all that great. So we got to be very, 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 very cautious right now. Very cautious right now. You've got ISM manufacturing. You've got job opening. That's yesterday. ISM manufacturing data came in weaker. Job openings fell to a 2-year low, and construction spending wasn't all that great. The news wasn't horrible, but it wasn't great. Today we continue. Qualcomm, chip stocks. Got to keep an eye on Qualcomm. CVS, Shopify, PayPal, Heinz. Revisions are starting to go up. They're now expecting 5.9% decline. They were expecting 7.9%. But remember, we're only about 3/4 done. Non-farm ADP payrolls coming out. I would not pay attention on that report based on what we've been seeing for the last couple of months. Seriously. Crude oil inventories are coming out today. That's really important. China, despite numerous assurances from top officials to implement measures and bolster the economy, measures introduced so far to stimulate consumption, revive capital markets, and assist the struggling property sector, are perceiving as either lacking specificality or too moderate in their impact. So what China is trying to do to spruce things up is not working out nearly as well. Nikkei closed sharply lower, driven by losses in heavyweight chip-related stocks as investors caution following Fitch's unexpected sovereign rating downgrade. Folks, when a major credit service downgrades USA, that's bad. That's really, really bad. And again, AMD rose 1%. They were expecting a rise of up to 9% or somewhere in that ballpark. Match up 7%. I was totally wrong on that one. And Starbucks and more consumer discretionary. Seems like consumer discretionary is dropping, which is not good for technology because technology has a lot of consumer discretionary. Is Amazon and Apple consumer discretionary, or is it tech? If you put 100 people in the room, it's going to be a very, very it's going to be a very, very tumultuous argument. Anyways, folks, keep your eye on the broad indices, and if they start giving up the ghost, it's a very, very bad sign. I don't want to bake the bears too much into your mind, because if Apple and Amazon pull a rabbit out of their butt tomorrow, that could really change things. But as of right now, I'm not seeing the tech consumer discretionary really, really outperform anything. And if you look at consumer discretionary, it's a declining triangle, a bearish triangle. And if you look at, let's look at technology, descending triangle. Also, so far, descending triangle. We'll have to see. We'll have to see earnings on Apple and Amazon. That's the big one. And what about XLC? What about communication services? So communication services are still holding up. So communication services, this XLC, IWM, although it's declining, it's still outperforming the rest of the market. And what was the other one? The last one, it was communication, Russell, energy. XLE seem to be outperforming the market. Now, folks, be really cautious and be really careful. If we can't get, if chips and consumer stocks go down and they start breaking below that this level right here, let me show you. Below this level right here, this line right here, we're going to be in deep doo-doo. Now, again, it can be saved by Apple and Amazon. Think about the market cap in those two, right? Let's be realistic here. But again, I'm very cautious right now, especially when you look at the Nasdaq and you look at the fact that we're in a major resistance area. Dow, major resistance area. SPY, major resistance area. And you're seeing descending triangles forming near the top. And down selling pressure like this, that's not good. That's very, very bad. Now, folks, today is Wednesday. And Wednesday, I give you my top and my worst pick and my best pick, a long trade and a short trade. So let me do that for you right now. Let me go to my CSI scan, get you guys going for today. And folks, if you're liking these videos, please subscribe to our YouTube Wealth Press channel. like our channel, subscribe to our Telegram channel. Go to rogerscott.com/Telegram. I give free trades there sometimes and post pictures of my pets. It's good stuff. Don't miss my Telegram channel. Most importantly, my VIP room is open to the public. It's happening at noon today. It'll be the second part of this video. Either click link above or below. Noon, you don't want to miss out. Now, what's the best stocks? The best top stock right now that I'm liking a lot? Let's take a look here. Let's take a look. Definitely not AMD. I still like Pulte Homes. I really like Pulte Homes, and I think they're going to break out higher. And they're not in any of the three sectors that are highlighted, and real estate hasn't been doing all that great. So I like PNR. PNR looks really good, and Pulte Homes looks good. To the downside, let's take a look here. I think Estee Lauder is going to break down more. EL looks really, really bad right now. I think Dollar General is going to break down, and I think FMC is already breaking down, and it's going to go from 94 to about 88. So I would say FMC if I had to put my money on it. EL and FMC. Folks, before I let you go, I've seen a lot of different strategies come and go during my 3 decades of trading, but one particular pattern that's consistently outperformed is called the M spike. That's a unique pattern that can be found on any chart, and it's a signal when its stock is likely about to make a big move. ETFs, stocks, futures, anything. I hosted a free bootcamp training session to teach everyone how to spot and trade it. So click the link either above or below and check it out now. After the session, you'll be better, more confident trader. You'll even get the top 12 performing stocks over the last 10 years using this indicator, and my top ETFs using this indicator. It's all included in the broadcast. It's a 10-year back test showing you results going from 80% to 70% on 150 trades for each one. It's really eye-opening. It's the only indicator that I know of that can, out of the box, kill it on the S&P and all the major indices without any tweaking in the last 10 years. Real estate, technology, bonds, gold, it kills it on all of them without any major tweaking. Average hold time 4 days. You'd be nuts to miss this one out. Follow the link, check it out now, and I'll talk to you later. Make sure to comment in the YouTube channel, and I'll respond. Bye, guys. Have a great day. Hope you're liking my VIP room. Now, 2 penny stocks for the day. Not penny stocks, small cap stocks day trade. Rover, R-O-V-R. That's R-O-V-R and VRT. Rover, R-O-V-R and VRT. Talk to you soon. Bye.